Hello, everyone, and welcome back. Jeb Smith here. Over the last couple of weeks, we've been talking about the housing market. We've been talking about how competitive the housing market is, how in many instances you are in a multiple offer situation up against 20, 30 offers in some cases. I recently saw a video where there were 121 offers on a house up in Sacramento. So the competition out there at the moment is fierce. And I often get home buyers reaching out to me asking, what can I do to help my offer stand out? And we've talked about everything, things that you can do to, change the contract, escalation clauses, changing the contingencies, removing the contingencies in some cases. And, what I've come to find in helping buyers in this market is that stuff helps, but it seems to me that sellers are really looking at one thing more so than anything else outside of price, right? Because price is always going to be key for many, many sellers out there. But what I'm finding is that there's a second component. And now I've talked about this in a little bit more detail. In fact, I mentioned it on our live call this past week that, outside of price, what are sellers looking at when they're picking the winner? Well, oftentimes when we get offers come in, what happens is us as listing agents, we review the offers and then we kind of break them down for the seller. And we have a conversation with the seller and we go over the terms of each one. We talk about price, we talk about escrow term, how many days is it going to be to close that property, or how much time are they asking for? We talk about deposit, earnest money, how much are they putting down payment, how much money are they putting down on the property, and then we go into things like contingencies, what are they asking for, all of that good stuff. And we compare all the offers, and then the top ones we typically want to confirm that the pre-approval letter is legit, so we might call the agent on the other side and discuss that. But what I'm finding is maybe some of that stuff in there doesn't matter, or maybe you need the entire package plus the one that we're going to talk about right now, and that is down payment. Down payment seems to be, for most sellers, the driving factor at the moment in picking an offer outside of price. Because what happens is they look at the price first and then they look at the down payment terms. And in some cases, you might have a lower offer get accepted where someone has a higher down payment because the seller feels more comfortable with that loan or that buyer closing because they have more money in the bank. Now, should they think that way? Is that the right way to think? Maybe in some cases it is, but there are often cases where buyers are putting less money down and are just as qualified on paper without having that large down payment as any other buyer. And so why would a seller decide to go with somebody with a higher down payment in the environment that we're in? So we're going to talk about that here for just a moment. And then we're also going to talk about what some home buyers are out there doing at the moment that may or may not be in a gray area for some, and get into the detail of that here in just a minute. So, a seller looks at an offer and then they look at what someone has, how that might compare to what the home is worth. So we're going to say, for example, a home is worth $700,000 and somebody makes an offer for $800,000. Now that may seem crazy to many of you out there at the moment that someone would offer $100,000 over the asking price of a property, but it's happening. It's happening in all kinds of markets. I talked about it last week where I was on the buyer side of someone that did this exact same thing. And we had 12 offers above us. In total, there were 26 offers on that property. 12 were higher than us, and we were $100,000 over the asking price. So what does a seller look at in that case outside of, does the buyer have the money that they said they were going to put down on that property, which in my case was 20%? And so my buyers were putting 20% down, which is a solid offer for most people. But why would they choose somebody that maybe had a higher down payment or somebody that had more money in reserves? And in that case, it's because what happens if the appraisal does come in short and that buyer has waived the appraisal contingency? Does that buyer have the additional funds documented in checking, savings, 401ks, whatever it is, stock accounts, to come in with the difference in order to close that property? Because you do have some buyers out there that are saying, hey, I'm willing to put 5% down on this property and I'm willing to waive the appraisal contingency and go above the asking price. This is actually an example of mine. And we sent in the bank statements to go along with that. And, one of the agents came back after they accepted another offer and they said, well, your client didn't show enough money to make up the appraisal in the case that the appraisal came in short. And my response is, well, my clients actually have more money than we've documented here. I assume that if you needed more documentation, you would ask for it. In this case, they didn't. They just decided to go with another offer. And, what I'm seeing in this market right now is when you're submitting an offer, you should be submitting your highest and best offer up front. You shouldn't, think that you're going to get a counter and then you're going to come back with a better offer at that time. Because 3 of the last 5 offers I've submitted, we didn't even receive a counter offer. We just received a response saying the seller decided to go with an offer. They didn't counter anyone. They liked one offer and they moved forward. So sellers are looking for specific things in this market. Typically, they want to see, shortened contingencies. They want to see specific things, but they also want to see money in the bank. So what can you do to stand out? Well, if you have additional reserves outside of what you're putting down, maybe you have a 401k, maybe you have an IRA or a stock account or something, and you don't plan on using that money at all, you're not going to take it out for any reason, but maybe you still supply those documents along with your offer to say, hey, look, I have additional money. My checking and savings account isn't the only money I have in reserves, because, I'm finding more often than not, listing agents and sellers are just looking at the information that you provided and thinking that's all that's there, even though there's DU findings and automated underwriting results that document the assets on one of the pages that show all the additional assets. Most agents don't know how to read that, unfortunately, and so they're looking things and taking things at face value. And so in the case right now where, you might only be putting, 5-10% down, if there's additional money that you have that you can document, I would suggest putting it as part of the offer and showing that, hey, even if you don't plan on using it, this is money that I have. And then the seller can think however they want, but they probably are going to think, well, if the appraisal comes in short, they do have the additional money. They could pull it from these places and come up with the difference. But if you're a buyer and you are waiving contingencies, and we've talked about this, and I'll link to a video here, don't waive appraisal contingencies unless you have the money to make up that difference. Otherwise, you can be putting yourself in a very difficult position. So a moment ago, I talked about what some buyers might be doing that's in a gray area in order to, make their offer more appealing. It's not really a gray area. It's black, if you will. I mean, it's clear that you're violating the contract and lying on the contract. But some buyers out there at the moment are saying, hey, look, they have bank statements that show they have more money down or more money to put down, but they're only planning on doing a smaller loan. So say you have a buyer, or say you are a buyer and you're only planning on putting 10% down, but you have additional money. Maybe it's in a stock account, maybe it's in a 401k or what have you. And you come in and you say, well, let's put the offer and say we're going to put 20% down instead. So the seller, the listing agent, look at it and say, hey, this offer says they're putting 20% down. We see the accounts here, the checking, the savings, the 401k, all of that. And it shows that they have the money for the 20% down. Looks like a pretty solid offer. They move forward with it. And then when you get into escrow, the lender only does the 10% down and moves forward that way. And you might think, as a buyer, how does that work? Well, technically, you're in violation of the contract because you told the seller, the listing agent, everyone that you were doing, 10% or 20% down in this case, and you ended up doing 10% down. Now, there are many cases out there where the lender will move forward, and nobody will ever know until you get into the final days of closing where the loan docs come in and there are actually less money being put down on that loan than what you said. And in many instances, things will move forward. The seller doesn't want to change anything, even if they, when they find out and they're just ready to close the loan and everything went smooth and there's no problems. In other cases, there might, escrow might want an amendment and want the seller to sign it because there's less money being put down than what's required or than what you mentioned on the contract. In that case, the seller is going to find out, hey, look, you're putting less money down. They might not like it. They may feel like they got bamboozled in that case. And technically, because you're in violation of the contract, they could keep you to putting that money down and or potentially canceling the transaction. So should you do that? Should you say that you're going to put more money down than you are? That's for you to decide. Obviously, your agent has to be on board with that and and maybe your agent doesn't know in some cases how that's being taken care of, but there are people out there probably doing this to help their offer stand out. Now, in many cases that I've come up against, home buyers are saying they're putting a lot of money down. I mean, again, there were an offer last week where there were two buyers putting $250,000 down on an $800,000 purchase. And so in that case, even if they put a little bit less money down, it would have been more than my buyer was putting down either way. So maybe those offers would have still stood out compared to ours, but it's really hard to tell. So sellers in this market not only looking at price, but they're looking at bank accounts, they're looking at money. And if you're someone out there that doesn't have a lot of it, don't get completely frazzled. I'm just, telling you this from what I'm seeing in the housing market at the moment. It's competitive out there. So if there are things you can do to stand out, maybe you have a parent or someone else that could, add you to a bank account and you could show those reserves. Those are things that you could do as well. But I'll continue to update you on the housing market, on buyers and what you can do to stand out as I receive more information. As always, I appreciate you taking the time to watch, the support. Hope to see you again soon. Have a great day. Bye-bye.